Well, certainly it appears the financial markets like it. Generally, the Republicans are considered to be more favorable towards business. I think particularly lower taxes. We see early signs the Obama administration is willing to compromise on the taxes. I think that's going to be an exciting end in these to the lame duck session about how are they going to extend or to what extent they're going to extend the tax cuts. That's the most immediate question. But further down the road, clearly more regulation is not in the cards for business, and that's one of the things they objected to under the Obama administration. Well, there's gridlock if the president is different than the Congress, and if the two houses of the Congress are different. Of course, it's often been said that actually gridlock is good for the economy because a lot of the laws that are passed are not good for the economy. So the less laws that are passed is better. So I'm not concerned about that. I mean, if there's a national emergency, all the parties are going to get together in response to 9/11, something like that. We know that's going to happen. But when it comes to contentious issues like that, stalemate is not the worst situation. I'm very much in favor of this program of the Federal Reserve, $600 billion, called quantitative easing. I think it's very positive. I think that it will push banks now into a position to be more willing to lend because basically the Federal Reserve is giving them $600 billion worth of reserves. Now, they already have an awful lot of reserves, but they need that to cover bad loan losses, regulations, et cetera. I think if they're offered more reserves on top of that, they'll be very tempted to push that out into the lending market. The margins are very high for them right now, and I think this is the push that is needed. I think this is a very favorable policy by Bernanke and the Fed. Well, the problem is how much will this depreciate the currency, and that is the biggest concern. I think most of the depreciation, honestly, has already occurred in anticipation of the quantitative easing of the Fed. I actually think that if this stimulates the economy, as I believe it will, that we will see a stronger dollar in the future, particularly against Europe and Japan. So I'm not too worried that it's going to cause continued depreciation, and I think that will lessen some of the international concerns about this. Well, there's been a lot of volatility in exchange rates. Whenever you get volatility, you get talk about capital controls, but I don't think we want to go down that route. I mean, really, the free flotation of capital is a critical ingredient to global trade and the emerging markets and the success of the world economy. So there'll be a lot of talk. If the dollar does strengthen, as I anticipate in the future, I think a lot of that talk will die down and we won't have any restrictions on capital. Well, I think we want less restrictions on both sides. I'm not in favor of what the House had done in trying to close down on China or threaten China with that. I think that the free trade should go both ways. And but even if the other countries don't respond, which I hope they do because I think they'll be better off, I think it's still very harmful for us to take a position of if you're not going to allow our goods, we won't allow your goods, because I do think that the allowance of goods into our country is a big positive for us and world trade, and will ultimately lead to more demand for our products abroad. So I'm glad he's doing that, but he should not react if they don't allow more trade. I think a unilateral reaction by the United States would be very detrimental. I consider this week to be a trifecta victory for stock investors. First of all, they got what they wanted, which was Republican control of the House on Tuesday. On Wednesday, the Federal Reserve announced a pretty aggressive quantitative easing program, which I really do think is that liquidity is going to move to a great extent into risky assets, including stocks. And then on Friday, we had the employment report, which was one of the best reports we've gotten in a long time. I think all these three ingredients are going to set up to a very positive fourth quarter here for stocks that I really think will probably extend into 2011. What I am worried about is if there's a total stalemate on the tax issue and we start getting higher withholding on taxes in January because the old tax rates will take effect, that could be very detrimental. So I'm hoping that there's at least a degree of cooperation to temporarily freeze the taxes until a more permanent solution can be wrought. But outside of that, I think it looks quite favorable for a year end.